Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 28th of February, 2023, about 6:17 p.m. Central Time. So the gold market made a stand in the 1810 area. It's back up to the 1831. The big question is that your trading bottom? Time will tell. Silver is still not gaining on gold. Copper market held the $4 range, but that's all you can say. The dollar is still a stronger market. That will work against the gold as a headwind. But the biggest competition for gold are interest rates, generated by the U.S. Federal Reserve continuing to raise rates. Now, Mr. Powell will be going to Congress. Yep, he does his speech between Capitol Hill, go between the Senate and the House, March 7th. And then I think the next day on the 8th, he goes between the other one. He'll be talking about, and I'm sure that the senators and the reps are going to drill him. What are these interest rates going to do to jobs, the economy? What do we do about these high rates? People can't buy homes. How much higher are the rates going to go? The whole rigmarole. And then he'll answer in some manner, what are you going to do about the debt ceiling? Because you've got to resolve it. It is not his place, that's the Treasury's area, but it does affect interest rates, it affects everything, and it could be a nasty situation. They won't resolve it at that meeting. Congress will wait for the last hour. That's what they always do. They'll stay overnight, and they do their sessions. They make you wait to see did it happen or not. Are they going to close down Social Security? Are they going to close down other offices? And they have. It's a very short period of time, but it's bluff poker, and they play it this way because that's what politicians do. Politicians make your life miserable. They don't make it better. They make it miserable. When I look at the gold market, you can see how the market has fallen into the 1823 area. And as the market is just sort of playing right there, we were talking about that all the way just under 1900. I was also saying at that point, I'll be looking at a confluence of the 18, the 200, and the 100-day averages, because they were in an area where they were starting to, if you will, come together, and that was where I was looking for the support. So you can see the market did hold it, and that's the battlegrounds right now. What a heck of a decline you've had. It's been a big decline. And you could see that the pattern has been one of lower highs, lower lows. This has been a pretty clean-cut bear market. And here's the areas of support. Now, if we come back, because one of you said, well, Ira, you're not right. It hasn't hit the 200-day. You are right. It missed it by $2.80 when I started talking about it all the way back here, that's where I thought it would go. I don't care if it hits it. I care that the market did hit the Bollinger Band area for support, the zone, 10-20. And what was the low today? Let's go to that and see how close that was. 1805. But you did hit the 100-day. Now, if you've taken my charting course, Wise Guy, you would learn that the first supports come in at the closest of key moving averages and or the Bollinger Band, and resistance the same on the big rallies. Doesn't mean you can't go to the other higher average or the other, but it's a zone. Look for the zone. But I do appreciate at least you are watching me and you're keeping up with what I'm saying. So did we leave the downtrend? We did not. You still have the lower highs, lower lows. You certainly have an outside day up. If you take out today's low, the odds are exceptionally strong, 90 percentile range, that you will hit the rest of those averages. Do I think you should do that? I don't think you have to. If the market wants to carry, it can carry to wherever the 18-day average is if you lose the embedded reading, and that's the if. Now, to lose the embedded reading, you have to close over 21. So you've got from now until the close, what do we have here? It's going to be 6:15. You've got about 22 hours from now before we know if it's going to do anything like that. But it's really not 22 hours because the settlement price in gold is at 12:30 p.m. while the final trade's at 4 p.m. and it's right now 6:20 p.m. So you've got to take that all into account and you get to see what it does. If that occurs, look for a challenge of the 18-day average of closes, and then we'll decide, does the market have any more to it? Where would this market be if it loses the stochastic? Is it overbought? Is it neutral? Where is it? There'll be a lot of things. I can tell you this, the work is saying you don't want to be short. It is not saying you want to be long yet. When you look at the gold, silver, okay, silver gaining back a little bit, nothing major. And silver did get down to the lower band, and that's where it's trying to bottom. And notice here also, you have an outside day. So you have two outside days. That means you made the lowest low in the moves in both. You reversed, you settle near the highs of both days. And the question is, are you going to lose the embedded reading? Not yet in the silver market. So the pros are still selling the rallies until you get a settlement, in my opinion, over 21. And if that happens, then you have layers. The first layer would be the 200-day average and then the 18. Those would be the numbers that I look at. In the copper market, you had gotten overbought, you had gotten oversold, coming up, coming down, and you're stuck at the 18-day average. I mean, there's just no trend at work. You have a higher high, lower low in a market with a slight draft to the downside, but not yet saying, hey, I'm a bull market, we're ready to go, which has disappointed people galore because they've been waiting for this market to come alive via China, and it just hasn't happened yet. I think it'll happen, but not yet. In the platinum market, higher lows, higher highs, fighting right at the 18-day average and the 200. So what had been support on the way down, and you fought a battle right here, becomes resistance, as you can see, on the way up. That's just how they flip-flop each other. And if you can get this market mounting any type of rally, then in between the 993 and the 995 area is your big resistance of the Bollinger Band 100-day. Is the market an easy buy here? No. If you buy it, you got to risk back under 903.90. That's an awful big risk to take. In the palladium markets, you're still very much in a bear trend. The question is, are you embedded? You can't count this right now because remember, this is the evening trade. But both numbers on Tuesday settled under 20. Both numbers the day before were under 20 and the day before. You're fully embedded. If you lose the red line under 20 by closing over 21, then I look for the market up here. But in between now and then, I think the pros will get aggressive on the short side if you get a rally, and they'll probe the short side until that 21 is lost, seeing if there's another leg to the downside. In the dollar index, you went right up to the Bollinger top, and you've got a problem. Now, did you lose the embedded reading? No. I was writing my traders today, and I'm going, we are on the verge. At one point today, near the lows, you were losing the embedded reading. But I warn you, you don't want to get what one of my brokers, Ron, called stochasticitis. He named it a decade ago, and he was so right. An early user of this with the Bollinger Band will say, look at this, and they start guessing it. Folks, don't guess it. It's either going to lose it, stay embedded. It'll tell you what it's going to do. You don't have to be the first kid on the block that tries to catch the turn in the market. It makes no sense. Again, we have our live webinar coming up. So remember that. And that webinar is going to be this Thursday. The invites have been sent out. Many of you have signed up. We got a good crowd already. And we typically fill up these things 1, 2, 3. If you're not on my mailing list, which means you're not getting the invite, there's a way for you to join. Just take your cursor to the top up here, and you will see an icon appear. Give it a click. It'll take you to the fill out the page. You have to fill out a form. Why? You're going to get a user ID and a password. I open it up at about 12:15 p.m., the webinar. And then I start it at 12:30. So you get time to come in. You can write me things, whatever you want to do. And then we start. It's 20 minutes long. And once I'm going, it goes fast. If I don't have a lot of questions, I end fast. That's never happened, but it could. People keep bringing things that they want. If you want me to cover spider stocks, whatever those are, do me a favor. When you get back from us the user ID password, on that page will be an area where you click a link. That's where you write me an email. It comes right to me. Tell me what you want me to cover. I'll build the chart so that we don't have to worry that during the 20 minutes we're trying to build it. I have all the commodities built. There's only about 40 of them. But it's a very different world than spiders and stocks when there's thousands. I don't possibly have all those charts built, and I don't think you expect that I do. So it's so much easier if you write me ahead of time. I prepare the charts, and we whip through them like that. You'd be shocked how fast 20 minutes goes, and I try to answer all the questions you have. Again, just click up at the top here. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.